investment. What's up, guys? Welcome back to the channel. Today we're going to talk about something that flew completely under the radar for most people, but in my opinion, investment, it may have been one of the most important developments we've seen in a long time. Now, before we go any further, let me say this clearly, like I always do. Investment. This is not financial advice. I am not giving you any dates. I am not giving you any rates. I am not telling you to buy, sell, hold, or exchange anything. Investment. This is speculation, analysis, pattern recognition, and discussion based on publicly observable developments and logical sequencing. Investment. You are responsible for your own decisions. All right, let's zoom out for a second. When people think about progress in Iraq, especially in the context of currency reform, investment banking reform, or economic restructuring, they usually look for loud signals, big announcements, dramatic headlines, emergency meetings, surprise rate changes, investment. But that's not how serious financial transitions actually work. Real reform gets tested quietly. And recently, Iraq faced a pressure moment that most casual observers didn't even recognize as a test. But it was, and the fact that they navigated it without chaos, that matters. Investment, let me explain. Every country that wants stronger global integration has to demonstrate three things: stability under pressure, control of its currency, and compliance with international financial standards. Not once, not for show, repeatedly. Because global finance doesn't reward promises, it rewards consistency. Investment. So when Iraq encountered recent economic strain, whether from regional tensions, oil price fluctuations, dollar supply tightening, or external political pressure, investment, the question wasn't, will there be headlines? The question was, will the system hold? And it did. Now think about that. In the past, investment, similar pressure events caused spikes in the parallel market, panic buying of dollars, public complaints about exchange spreads, and visible cracks in policy execution. Investment. But this time, the response was measured, controlled, coordinated, and that is not accidental. Here's what I mean by test. Investment. Imagine you're a global oversight body watching Iraq. You're not emotionally invested. You're not watching YouTube rumors. You're looking at hard data. Investment. You're watching foreign reserve levels. You're watching currency auctions. You're watching compliance reporting. You're watching anti-money laundering enforcement. You're watching how quickly policy adjustments are implemented. Now imagine a stress event hits the region. Maybe oil dips unexpectedly. Maybe geopolitical noise rises. Investment, and maybe the dollar strengthens globally. If Iraq panics, you mark them as unstable. If Iraq maintains order, you mark them as maturing. Investment. And maturity is what earns international trust. Now here's where it gets interesting. During this recent pressure cycle, investment. Instead of losing control of the spread between the official rate and the street rate, authorities tightened enforcement. They increased oversight on dollar transactions. Investment, they coordinated with international partners. They communicated calmly. That's a stress pass. And if you've been in this space long enough, investment, you know Iraq hasn't always passed those smoothly in the past. So what changed? Infrastructure, systems, international alignment. Let's talk about systems for a minute. Over the past few years, Iraq has implemented electronic banking platforms, cross-border transfer monitoring tools, and stricter compliance reporting structures. These aren't flashy reforms, they're boring technical regulatory upgrades, but they matter because when pressure hits, digital monitoring allows faster reaction, and compliance frameworks prevent capital flight. Structured auctions reduce manipulation. So when the recent pressure event came, and yes, I'm being general intentionally, investment. The system absorbed it instead of collapsing under it. That's growth. Now I want you to think about something. Investment. Why would global financial institutions care so much about Iraq demonstrating stability? Because no one wants to align with volatility. Investment. If a currency is going to strengthen, float, adjust, or integrate further into global markets, investment. International partners need confidence that sudden stress won't undo progress. Confidence doesn't come from speeches. It comes from surviving stress. Investment. And Iraq just survived one quietly without dramatic headlines. That's the part few people saw coming. Now let's break this down even more practically. Investment, picture this scenario. Let's say Iraq is working toward deeper financial normalization, things like expanding correspondent banking relationships. Investment, strengthening trade settlement systems, modernizing monetary tools. Now imagine a regional shock occurs. If Iraq loses control of dollar flow, or inflation spikes, or public panic rises, those normalization efforts stall. But if Iraq contains the shock, investment. Normalization continues. Momentum builds. Here's something else most people overlook. Tests aren't always external. Sometimes the test is internal discipline. Investment. Can policymakers resist the urge to overcorrect? Can they avoid printing excess liquidity? Can they maintain rate structure even when citizens complain? Investment, that discipline signals strength, and strength signals readiness. Now let's be realistic. Passing one stress test doesn't mean everything changes tomorrow. Investment. It doesn't mean a sudden revaluation. It doesn't mean overnight wealth shifts. That's not what I'm saying. Investment. What I'm saying is structural confidence increases incrementally, and incremental confidence is how nations reposition economically. Investment. Let me talk directly to you for a minute. If you've been holding currency or following Iraqi economic reform for years, you've probably experienced emotional cycles: excitement, disappointment, rumors, silence, spikes, pullbacks. It's exhausting. But long-term structural change isn't measured in viral headlines. Investment. It's measured in policy resilience. And resilience is what we just witnessed. Now, here's a question I've been asking myself. Was this test organic or intentional? Investment, meaning did external forces apply pressure naturally, or was this a controlled stress simulation coordinated with international partners? It sounds dramatic, investment, but financial systems sometimes undergo informal stress exposure before major transitions, not staged theatrically, but observed intentionally. Investment. If international oversight bodies wanted to see how Iraq handles volatility before granting deeper integration privileges, investment, this would have been the perfect opportunity to evaluate them. And from what we can observe, they handled it professionally. No panic rate swings. Investment, no emergency policy reversals, no uncontrolled liquidity injection, just measured correction. That's different, and difference matters. Investment. Let's also consider public messaging. Notice how communication has shifted. It's less reactive, more strategic, focused on reform language rather than defensive language. Investment. That tone shift tells me leadership feels more confident in system control. Confidence at the top trickles down into execution quality. Investment. Now I want you to imagine two paths. Path one, a country that constantly reacts emotionally to market noise. Investors avoid it. International banks hesitate. Reform stalls. Path two, a country that absorbs volatility calmly, adjusts internally, and keeps policy consistent. Investors slowly increase trust. Investment, institutions strengthen partnerships. Which path leads to stronger currency positioning long term? Exactly. Stability is currency strength before rate strength. Investment, let me say that again. Stability is currency strength before rate strength. And what we just saw was a display of stability. Now, does this guarantee anything? No. Investment, does this suggest maturity? Yes, and maturity changes how global partners treat you. And again, quick reminder before we move forward, this is not financial advice. Investment. I'm not giving you dates, I'm not giving you rates, and I'm not telling you what to do with your money. This is analysis, speculation, investment, and strategic observation based on patterns and global financial behavior. Always do your own research and make your own decisions. Investment. But here's where this gets more interesting. Passing a test doesn't just mean good job. It often unlocks the next level of trust. Investment. And trust is the currency behind currency. Let's talk about that. When international financial institutions evaluate a country, investment. They're not just looking at reserves or oil production. They're evaluating behavior patterns. They're watching how leadership responds to stress. Investment. They're measuring whether reforms are cosmetic or structural. If Iraq had stumbled during this recent pressure cycle, if the parallel market had spiraled out of control, investment. If enforcement had weakened, if dollar leakage accelerated, that would have raised red flags. Instead, enforcement tightened, oversight increased, investment and coordination appeared stronger. That signals something important: internal alignment. Internal alignment is critical before any major economic shift. Investment, because if your ministries aren't synchronized, finance, central bank, trade, anti-corruption units, you can't execute large monetary transitions safely. Now let's play out a realistic scenario. Imagine Iraq is quietly working toward deeper financial integration, things like expanded international banking access, upgraded settlement systems, and possibly future exchange flexibility mechanisms. Before any of that moves forward, investment, global partners would want proof that Iraq can manage volatility without external bailout support. This recent moment may have been that proof. Investment, and if it was, that changes the conversation. Now, I want to be clear, passing a stress test doesn't automatically mean a currency revaluation is around the corner. Investment. It doesn't mean tomorrow, it doesn't mean next week, it doesn't mean a specific number. What it means is that structural readiness improves. investment, and structural readiness precedes opportunity. Here's something most people overlook. Currency value isn't just about economics. It's about credibility. Investment. If markets believe a country can maintain monetary discipline under pressure, demand for its currency increases organically over time. Investment confidence rises. Investment capital inflows stabilize. Speculation decreases because predictability increases. And predictability is powerful. Let me give you an example. Investment. Think about countries that transition from unstable monetary environments to stronger ones. It didn't happen because someone flipped a switch overnight. Investment, it happened because they demonstrated repeated discipline cycles. They passed small tests, then bigger ones. Then they were trusted with more flexibility. Investment. Iraq passing this recent test could be one of those incremental steps. Now here's another layer. There's something called perception risk. Investment. Even if a country has strong reserves and policy tools, if global perception labels it as fragile, markets behave accordingly. By navigating this pressure moment smoothly, Iraq may have quietly reduced perception risk. And when perception risk drops, institutional conversations change. Investment. Now let's talk about timing windows. Financial reforms don't happen in isolation. They often align with fiscal planning cycles, international reporting periods, investment, and global economic calendars. If Iraq wanted to demonstrate stability before entering a new fiscal phase or renegotiating certain international frameworks, investment. This would have been the moment to prove capability, and they did. But here's what I find most compelling: the absence of emergency behavior. No dramatic overnight policy reversals, no uncontrolled liquidity injection, no visible panic communication, just measured correction. Investment. That tells me confidence levels internally are higher than they were years ago, and confidence isn't built overnight. It's built through system upgrades, investment, compliance enforcement, and coordinated policy execution. Now let's ask a bigger question. What could this unlock? Investment. If global financial observers now view Iraq as more stable under pressure, doors begin to open incrementally. Expanded correspondent banking relationships. Investment. Increased trade settlement trust. Lower transaction friction. More international partnerships. Those aren't flashy headlines, but they strengthen economic foundation. Investment. And foundation strength is what supports any future currency appreciation, float adjustment, or monetary modernization. Let's think through a hypothetical. Investment. If Iraq were ever to adjust its exchange framework, again, no dates, no rates, it would need global confidence that the adjustment wouldn't spiral into chaos. Investment. Confidence is earned through stress performance. Stress performance just improved. That's the connection. Now I want to talk directly to you again. Investment. Some of you have been watching for years, waiting for a dramatic headline moment. But major financial shifts often happen after long stretches of boring stability. Investment. Boring is good. Boring means systems are working. Excitement usually means instability. Right now, what we're seeing feels controlled, not chaotic. Investment. And controlled environments are where strategic decisions can be made safely. Another angle to consider is regional positioning. Investment. If surrounding economies are dealing with volatility while Iraq demonstrates stability, comparative strength increases. That doesn't mean immediate changes. Investment, but it improves negotiating leverage. Leverage matters in trade agreements. Leverage matters in investment deals. Leverage matters in monetary discussions. Investment. And if Iraq just increased its leverage by proving stability, that positions them better for whatever next step leadership intends to pursue. Investment. Now let's explore a possibility. What if this wasn't just a random pressure event? What if it was anticipated? Investment. Financial leaders often know when regional volatility might spike. They prepare liquidity buffers in advance. They coordinate communication strategy. Investment. They align enforcement protocols. If preparation was already in place before pressure hit, that tells me internal forecasting is improving. And improved forecasting means improved strategic control. Strategic control reduces surprises. Reduced surprises build trust. Trust builds opportunity. Investment. Opportunity opens doors. You see the pattern. Now again, let's stay grounded. This does not mean flip a switch. It does not mean assume outcomes. Investment. It does not mean get carried away emotionally. It means observe behavioral shifts. And behavior is shifting. Less reaction, more structure. Less noise, more coordination, investment. And when structure increases, long-term potential improves. Here's one more scenario to think about. Investment. If international oversight bodies were evaluating Iraq for deeper financial privileges, maybe expanded access or upgraded classifications, investment. This stress event would have served as a real-world exam. On paper, reforms can look impressive, but real-world volatility reveals true capability. investment and capability is what matters. Passing that kind of exam doesn't generate fireworks, it generates quiet approvals. Quiet approvals can move big doors.